My mind, gotta hustle and grind. Financial literacy always on my mind. I'm stacking knowledge, no time to waste. Gotta invest smart, gotta keep up the pace. I'm reading books, learning all the tricks, studying the market, making calculated picks.
What's good, everybody? It's your boy Reckless Ray De Niro, and we are back at it again with another Operation Debt Crusher. We're not going to forget it. We pushed it off because I had an emergency episode that I dropped because I put off my bag talk on Friday. I got an emergency meeting episode bag talk that came before this. So we're going to just jump right into it because I'm recording these at the same time. So it's going to be the same shirt and hat. We're going to go ahead and pull up and get this Operation Debt Crusher out of the way. We're going to go through the debt. The skinny of it is, over the month of January, we actually increased our debt $3,000. And I've talked about this in other episodes. I had to buy a phone. So it would have been $2,000 in the wrong direction, potentially. And it turned into $3 because we bought the phone. So it kind of shuffled around how my payoffs went for some of the other cards because I had to pay off a card to assume the additional debt. How that played out, let's take a look. So the Capital One credit card, which we are not touching, or not the Capital One, our Robinhood, which is going to be our daily driver yet again, is sitting at $3,675.65, which we are not touching that card. I actually lost that card, and then instead of immediately replacing it, I'm waiting to replace it. So that way, until this goes back to zero and it can be the daily driver again, it's just not getting touched. Our Capital One Venture is sitting at $1,284.83. We are looking at getting rid of these around $1,000 debts. I'm going to just go ahead and pay those down over the month of February. We are doing a debt cycle, and we'll talk about that here as we get to the end of this. Capital One Quicksilver is at $1,565.12, which is our current daily driver. As pretty much after this recording, I'm taking my car in for maintenance, so this is probably going to be above $2,000 at that point. Over the month of February, it's a short month. February is a short month, so we'll see what this actually plays out and looks like. Our Citibank, which is our priority card, we've got down to $3,754.49. That is one of the ones that we're looking at cycling as it is now on interest. So it's pulling interest. We're getting finance charged on that. Also, this is another card where they send me blank checks to balance transfer, and they just started sending them again. And we need this card opened up because part of my debt cycle strategy is to get as much as we can into 0% positions or next to 0% positions. We like cheap money, and that way you can pay them down faster. This year, our goal is to get all of this gone. So hell or high water. That's kind of the goal. One of the caveats for that is once my income portfolio hits $60,000, which we are floating at just under 40 now because of the market downturn. But once we get to $60,000 in that portfolio, if this is not gone, we're going to carve out what we need out of that portfolio to make this gone. Because at that point, we'll be at a good spot to where if there was no consumer debt, we could run the portfolio flat. Moving on, Discover, which is just now kicked over again while we're doing the debt cycle. We've run our time period on all of these. So January was 0% until January. We're in February now. So now this is going to be having percents. We're sitting at $5,636.20. Our Chase Slate, which we opened up so that we could perform the debt cycle, is at zero. It's actually at negative 96 cents. And that move was specifically to open this up. Our Chase Sapphire is at $5,800 or $5,082.93. That's going to get cycled. Our Bank of America is at $8,387.17. This one will probably not need to cycle, because once we cycle over to this Chase Slate, we'll have a minimum payment of $500 on that to just chunk that down. And we'll probably also start bumping, once we do the cycle, we'll bump up our payment on this to chunk it down. And then we'll have a contingency card being the Citibank open for if we need to cycle something off of this. But our goal is to condense everything down into one card that is at next to no interest or at zero interest, depending on what timeline we're looking to pay it off. And then have one daily driver and have the payoff plan for those two cards, and then chunk those down over the year. And as we're building up our portfolio being fully invested, we will then be looking at, once we hit that $60,000 metric, just taking what we need out of the income portfolio at that point and paying off all the what's left in one fell swoop. So if it's $20,000 and the $60,000 portfolio will go back down to $40,000. At around $40,000, if I wasn't managing this debt, I would have no problems being able to stay fully invested and continue doing what I'm doing, because I know that this system can work at $40,000. It's just I've got an additional $30,000 almost weight, which sucks because like we're almost back up to where we were. But again, I'm figuring this system out. Going fully invested in the brokerage account versus putting all the money on a credit card to pay these down is a little bit different as we're building up the income. We're also, for February, we're running our portfolio flat. So there's a little bit less income because we paid our margin off. Because February is a market volatile month. It's a hard month for the markets. So that does affect our income, considering it's coming from covered calls. My W-2 income is going fully invested, which is good for next month. But February is a preparation month. We're getting ready for taxes. We're going to figure out what our tax burden is going to be, which will actually probably also be getting added over into here. And we're positioning ourselves to where we don't have to worry about I don't have to worry about getting margin called, period, because of how little of the margin that I use. But I would prefer to have the income coming in at a cash basis and being able to just deploy flat over the month of February specifically before going all in. And since we're not using the debt, I can't transfer this over in the way that I normally would. We will be using the margin to manage the SoFi loan, which is another variable in this process that I've added upon myself as I pay for my car. And part of the debt that's in pay for my car and managing that SoFi loan is also adding an additional large bill. So I have like two large bills along with utilities, mortgage, all the other stuff that comes out of that. So the SoFi, I do dip into the margin for, and my house payment, I do dip into the margin for, because those two things specifically are just large utilities that come out of this account. So that's also a piece of this. Outside of that, we're making some adjustments, because I also did some tweaks with how I'm holding my bill pay money for my utilities and my mortgage that I get in the form of rent. And we're tweaking how that works as well. So that does affect this too. But we're fine tuning. And as we're fine tuning and getting to the other side of it, it's getting to a point now to where the system's coming together, because the fully invested part, I'm all in on. I am sold on that. It's the deployment for how you pay the bills, especially if you're running a debt load like I am, where you're sitting with, when we started this process, it was, I think it was like $32,000. And, we dipped below 30. That was a big accomplishment. We got down to about 25. Then we started tweaking with our financial structure and our financial system. And now it's running back up a little bit because, as I've stated multiple times, I'm perfectly fine running into debt as long as my asset base is growing. And so I get greedy, and this is the expense of getting greedy. But also, December was a test month, which we kind of held it kind of stable. January, we're kind of running a little bit full bore. February, we're making some tweaks so that we can run as hard as possible and as efficiently as possible, because while my asset base expanding is great, I don't want to continually run this number up until we wipe all the debt and I'm starting fresh and I'm like, hey, we've got $10,000 in debt because I bought $10,000 worth of assets, and we're going to pay those back over the next 10 months. And whatever's left over, we're going to use that to continue building and live off of. But I'm able to start cycling my money a little bit better. And this is actually keeping me from doing that, because under normal circumstances, when those city checks came in, I would have wrote myself a check for $10,000, $15,000. That would have went straight into assets. And then I would have immediately started paying it back, and I would have the assets after I paid it back. As it sits right now, we're going to be most likely using that for a debt cycle. That's not how I like using my money. Personally, I like using my money to buy assets. So that's basically what we've got for this episode of Operation Debt Crusher. Did not go the direction we wanted it to go. We're up almost $3,000. So everybody can be like, ooh, it's not working. Yeah, it's okay. We'll see. Because last month we were at 26,140. End of December, we were at $26,146.87. Now, I know 1,000 and some change of that is obviously the phone. The other part of that was the tweaks that I'm making to my financial structure, and it just made it to where, you do the minimum payment and a little bit, and you let some stuff float. Also, I focused on paying off my Chase Slate, which I didn't have to, but I wanted to use that balance transfer. So come the end of this month, probably here in another couple of weeks is when I'll start those transfers. So by the end of this month, this will be shifted around, but it's just going to be numbers moving around with a little bit added to it, because balance transfers, they do charge you a transfer fee to get some of these out of high interest positions into a low interest position. And then we'll update the date that the interest kicks in, so that way we can be managing and tracking that. And yeah, so that's what I've got for you today. I'm going to go ahead and grab my coffee, and start working on this emergency meeting video. So you guys have a good one. You'll be seeing this on Saturday instead of Friday. And yeah, we're gonna keep on running. This has been another episode of Debt Crusher on Future Financial Strategies, and it's your boy, Reckless Ray Dinero. And until next month, where we get to see where the debt sits for the month of February, I'm out. Peace.
Money on my mind, yeah. Focus, got no time for games, nah. I don't play it, I'm all about that financial literacy. Investing in my future, building generational wealth. Dollar bills, they be calling my name, but I ain't chasing fame, I'm chasing change. Learn the game, now I'm playing it smart. Putting my money to work, it's an art. I'm stacking paper, building my own empire. No more living check to check, I'm getting higher. Investing in stocks, real estate, and more. Got a secure bag that just what I came for.